every 4 years, the block rewards, the amount of Bitcoin that are handed out to the miners that are securing the network, gets cut in half. Now, why does that matter? Well, if you think about it, a miner has fixed costs. Their electricity costs are roughly fixed, their miner costs are fixed, and they're depreciating. And so if the block rewards, the amount of, compensation that's given to the miners falls in half, some number of those miners would go out of business and the network would be less secure unless the price adjusts and goes up. And what we have seen in every halving to this point is the price roughly doubles in terms of the fair value. And the fair value you can determine by Metcalfe's law, right? The number of users of the network and the activity levels. And so I have this buddy in the business, Tim Peterson, and he's done this great Metcalfe's law model, and it basically plots out on this parabolic curve what the price of Bitcoin will look like, and it's influenced by this halving event. And so if you look back in time, each halving has roughly added a 0, which means you get a 10x increase in overall value. And so 38,000 is the price. Price is not what I'm talking about. Price is a liar, right? Price is what two people agree to exchange a small amount of a good or service. That's not the value. The value, the fair value today, is in the low 50s, somewhere 51, 52. Let's round it to 50 even. Where is that value coming from? Coming from the network value based on all of the fundamental data on Bitcoin. So we're below fair value. So investors like myself are in accumulation mode. And if you look at the chart, it's a thing of beauty over the last year. Higher highs, higher lows. Doesn't mean there's not volatility, but it's an accumulation pattern, okay? And that is an absolute thing of beauty. And so in accumulation, you get this movement toward fair value. Because, when we were down at 15,000 a year ago, fair value was in the 30s. We were at, half of fair value. Today, fair value's moved up to 50. We're at 38. So yes, the price is up more than 100%, but we're still below fair value. So we're going to keep accumulating to fair value. But when the halving occurs next April, the fair value will double. So I will say that fair value sometime middle of next year ends up around 100K. In June of next year, we'll enter crypto fall. So in the 4-year cycle, you have spring, summer, winter, and fall. And crypto winter, last winter from kind of June of 21 to June of 22, it was pretty ugly, right? We were down 77%. Then spring hit and we started to recover from June into November. We collapsed all the way down to that 15,000 level. We entered crypto crypto spring. Then June of last year to June of this year, we had crypto summer. Crypto summer is not straight up. Crypto summer is kind of meandering back toward fair value. So by June of next year, we'll be at fair value. So call it, we get close to the 50K, but then we do the halving, and now we got to get from 50 to 100. And it's that movement that takes from investors being the people who are buying below fair value. Now we get closer to fair value, the traders come in. And traders don't care what the price is. They don't care what the value is. They just want movement. And so the traders buy and sell either side. As we get towards that fair value and we start to accelerate, now the speculators come in. Because now the miners are selling, and a speculator is just the opposite side of a hedger. A hedger is someone who produces an asset like a gold miner or an oil producer. They have to sell their product forward in the futures market, and a speculator takes the other side. But that speculation starts the price moving even more, and more speculators come in. And then we get into crypto fall. So if you go back to the last cycle in 17, last cycle would be 20, in 2020, what happened is we went up, okay, closing in on fair value at 30,000. Then we went all the way to 69. And then we get too far above fair value, and then we have to have the crash. And once the liquidations start happening, once the margin calls come in, that's when you get the big correction. You always go down below fair value, and the process starts all over again. Bitcoin is more developed. It's the most developed. It's the oldest, right? It's the king. And Ethereum is the crown prince, so it's kind of the second place. And I'll give you the way we look at it. So in 2018, when we started, I said we invest 70% in equity, 20 to 30% in tokens, and we bought basically 4 projects in 2018. We bought Bitcoin because we thought it was like a Series B. And when I say we bought, the reason I say we're different, we don't trade. We buy and we hold. And we have a 10-year life, and at the end of 10 years, we have to give the money back to investors. That's the way venture capital works. But I'm going to hold Bitcoin forever, literally. And that doesn't mean I'll hold all of it forever. I'll use some of it. And Ethereum, I'll probably hold forever, at least parts of it. Because I do believe, as you said, it's a building block. And we'll talk about why I think this in a second, but we bought Bitcoin because we thought it was a Series B. And a Series B means you think you can definitely make 10 times your money, maybe more. We bought some Solana, which was a seed investment. Now, a seed investment can go up 100x or go to 0, and a lot of them go to 0. I don't know yet which wins. And what I mean by that is which mental model wins. If I think about the internet, it's easy in hindsight. At the time, it was not easy. There were 80 internet protocols. In the internet, there were 80 protocols. Today, there are 5. What happened to the other 75? They went to 0. Mm-hmm. But it didn't matter because you couldn't invest, right? You couldn't own any of them. You can't own TCP/IP. Mm-hmm. But at the base layer of the internet is TCP/IP. It's actually IP, and then TCP/IP sits on top of it. And then there's FTP to move files. There's SMTP for email, HTTP for websites, and www that ties it all together. So it's a perfect stack. In Web3, I can make a case that Bitcoin is the base layer and that every asset will eventually settle on Bitcoin. I can make that case, right? That Filecoin, IPFS is kind of like FTP. Ethereum is like the www dot, right? It's the building block toolkit